folks, Dan Frio here, the mortgage update. Today is March 11th, 2020. So let's get at it. Rates spiked today. So let's start here. I want to give you the headlines. Mortgage rates rising at fastest pace in years. So if you haven't locked in, you missed the bottom. What's going to happen next? I don't know. And I hate to say it that way. I try to keep up on all this stuff. Wall Street doesn't even know. The guys that do this for livings for billions of dollars a year don't know what's going on. So here's why. Look at this caption right here. What's up with the crazy MBS sell-off? And I'll explain to those that don't know what the MBS is, for the newbies that are joining us, what that is and why we follow it. But if you read right in here, even now there is still no apparent reason specific to the time of day this occurred. Nope, that's not what I'm looking at. Hey folks, Dan Frio here, the Mortgage Update, and today is March 11th, 2020. So I want to start out with two of the biggest captions of the day, and this is a lot of people think mortgage rates are still at the ultimate low. They're not. If you didn't lock basically by Monday, you missed. We'd love to help you because rates are still better than where they were, especially like a year ago, but they're up. We came off the bottom, and I told everybody Monday, lock in. If you didn't lock, Tuesday I alerted, lock, and we continue to slide. So what's going on? Mortgage rates rising at the fastest pace in years. That's what I'm trying to tell everybody. Stop with these CNN and CNBC and all the other news channels. I'm telling you this, the facts. I'm going to show you behind the scenes on everything that's going on. There's a big sell-off in the MBS market. For those newbies joining us, you might say, well, what's the MBS market? I'll explain that in a minute. So basically, why? Well, if you read in here, well before the correlative move in Treasuries, MBS began to tank for no apparent reason. This is coming from a major publication that we all, on my side of the business, that we all monitor on a daily basis, as well as some other things. And let's get to those. I'm going to show you what happened today in the market. Now, finally, everybody's telling you to lock. I've been telling you to lock since Monday. So there's a lot of people behind the ball on this one. So my name is Dan Frio. I do the mortgage update every day. If you're in the Chicagoland area, I'd love to have you listen on weekdays, Monday through Friday, from 7:30 to 8 p.m. on AM 1160 WYLL Christian Radio. I've been on there for 13 years. You can also hear my show on Saturday mornings. We're rebranding that show to America's Wake Up Call with Dan Frio. We talk to politicians, accountants, CPAs, financial planners, everything. And then I kind of have some captions on about what the markets are doing, stocks and bonds, to kind of forewarn you of these things. So what I do is I monitor the MBS market. Why do I monitor the MBS market? It's called mortgage-backed securities market. This is a bond that trades on Wall Street that determines or creates or dictates mortgage rates. This is it. It's not the 10-year Treasury. It is this number right here. You're saying lock. Okay? So what happens? Why is this if we look at the chart, we're going to look at that in a second. You're going to say, well, this looks good because the chart is going down. Down is not good in what we're watching. Look at this dive. I predicted that we would be right in this range on a pullback, and we're right there. Actually, we're lower than I anticipated. I figured we would hit this bar right here, which is called a Fibonacci level, and we would stop, but we didn't. Okay, so let me explain this, how this works. This is the price. We're following the price of a bond. So as the price comes down, that's what the red means. The prices are coming down, meaning you're paying less for that bond or that investment. Thus, you're getting a higher rate of return on that investment. Well, to get you the higher rate of return, that means the rate has to increase. In this case, the mortgage rates are increasing because people are paying less for that bond. So we love when this trend line is going up. We hate when it's coming down. This time period right through here in this adjustment, I've never seen this in my 32 years of doing this. I called a lock right here. If you don't believe me, go back to Monday's review, and I told everybody to lock. And since then, we have been devastated. This is probably at 0.3 to 0.4, maybe to 0.5% added to the interest rate from when I locked in almost all my clients. So we were watching this trend line, and I always tell people, and those again are new to the channel, you're going to hear me say all the time, and I might get t-shirts made up to this: pigs get fat, hogs get slaughtered. We were on a roll here with mortgage rates, and then when we hit this level here, that was the lowest mortgage rates ever in history. I said lock them, because when I saw it go from here to here in one day, I said this is our bottom. Could be a short-term bottom. I don't know. And most of the analysts don't know. No apparent reason. However, tonight, Donald Trump, or President Trump, is coming out and putting together, I think, an economic plan to help hopefully ease this tension a little bit. Some good news coming out right now is, if you see here, right here, I don't think you can see that, but I can scroll down. Well, the markets right now, the stock markets are starting to ease. It's after hours, but a lot of the futures are showing that the stock market should open pretty okay tomorrow. But here's what's going to come out tonight. I think that President Trump's going to come out and say that they're halting payroll taxes. I mean, I think that's a short-term gain. Am I going to, because my payroll taxes are going to be zero for the next 2-3 months, am I going out to buy a car? No, but it'll help. One of the biggest things is the Federal Reserve is stepping in. They reduced the federal funds rate, which has nothing to do with mortgage rates. So take that. They reduced rates and mortgages went up. So I'll leave it at that, and go back to some of my previous videos and explaining the federal funds rate and what the Fed controls. But the Federal Reserve is now pumping liquidity into the system by buying Treasury bonds and a bunch of other things. That should halt the business of having this much volatility in the market. Again, if you've been in any of these markets for a long time, you don't see the Dow going up and down on a daily basis by 1,000 to 2,000 points. Normally, a normal market is, it goes up 100, goes down 20, it goes up 30, it goes down 20. That's what all these little moves here are in our business, the mortgage business. So it's up a little bit, it's up a little bit, it's down a little bit. Look at this change here compared to this. I mean, it's 300 times the adjustment. So that right now there's so much uncertainty in the market, and what the president's trying to do is just calm some fears. I don't know if the payroll tax, I think the payroll tax is going to be more of a mental thing than actually it's going to really help spur the economy. And again, if you have plants shut down all over the world that are not making the products, you can't sell anything. So your gross domestic product production is going to be down. Your sales are going to be down. Inflation numbers are coming out. I'm not even paying attention to them, because how do you have inflation when you don't even have products to buy? So there's a lot of things, employment numbers and everything, we're throwing out the door right now. The dust is kind of all over the place. We're waiting for the dust to settle. Nor even Wall Street analysts don't know really what's going on. I hate to say it that way, but I'm just being transparent. So I will post throughout the days if I see alerts coming. I didn't post today because I've been warning everybody to lock in these days. Why I said I thought we were going to hit a floor right here is these lines here are what we call the Fibonacci levels. These are guidelines on where we should be kind of bouncing around. And this usually creates we have a floor and a ceiling. This false ceiling, it's a ceiling, but I'll say a false ceiling, is we opened up the market that day this high, creating a new ceiling. All of a sudden, it just dropped right to this. So it was like a stock opening up, triple what the price was. And then by the end of the day, it was back to where it normally was. Let's say the stock was $100 a share on Monday. It opened up Tuesday at $300 a share and ended the day at $100 a share. So unless you grabbed right in here, which we did in most all cases that we have, and I'm just blessed to be able to be in that spot, we caught that bottom. So now the levels we're watching are here. This is the Fibonacci ceiling, and I thought this was going to be our floor. I do think it is going to stagnate, and we're going to be in here in the next couple of days. I don't think we're going to rally back to here or here, but again, I don't know. So I am gradually, new clients coming in, I'm locking where they want to be. because I don't know if we're going to continue this downward slide or what's going to go on. I'm just being honest. So if you have you put in an application, you didn't let me know that you want to move forward with it, let me know, get back with me, say, hey, keep me up to date what's going on, because I'd be more than happy to do that. Still, if you have not locked with another lender, here's what I'd ask you to do. We get a lot of loan estimates coming in on a daily basis. People are saying, I got this quote last week from this other place, what can you do? To be fair, that place probably didn't lock you. Please get a new rate update from them. I can guarantee you that they're not going to give you the same rate they did last week unless you were locked. So to be fair, get an update and then send me that update. Or if you say, I don't even want to deal with them, I just want to deal with you because you are in tune to the market, I'd love to take your application. But shoot me an email with your loan estimates and or your mortgage statement. Rates are still crazy low. They're still phenomenally low. So I would still highly suggest people refinance or keep looking into it because I think there's going to be an ease. But shoot me an email at Danny, DANNY, .frio, FRIO, at preferredrate.com. Let me spell preferred rate. It's PREFERRED, rate, RATE.com. Sorry to spell all that out, but I've had some people emailing me at preferred rate. It's PERFERRED. I don't get those because that's not my email. So shoot me your loan estimates, your mortgage statements, anything you have that you want me to take a look at, please send it to that email. If you want to talk, give me a call. 844, it's an 800 number. So 844-775-LOAN. That's 844-775-LOAN. And if you want to apply online or anything of that sort, my website is down for another about 4 or 5 days. We are coming out with a brand new website that is going to blow your socks off. So if you need any assistance, please shoot me an email saying, Dan, I'm interested in putting in an application. I'll shoot you an email back with the link to apply online, or I'd love to just take the information over the phone. So God bless. Thanks a lot. Hopefully we can get some great news from the president tonight and some other things. I'll post probably in the morning to just give you an update of what happened and how that opened the market tomorrow morning. And we will go from there. But I'd love to hear from you. If you like the video, please give me a thumbs up. Subscribe down below. Click the bell so when I do post an alert, you get it. Please share the video so you can have other family, friends, neighbors, relatives, know what's going on, especially if they're looking to get a mortgage. Our average loan is about in the high 200s to low 400s, basically in that range. So, by cutting your rate a half or 3/4 or over 1%, you're going to save thousands and thousands and thousands of dollars. I could guarantee you that. So God bless. Take care. See you tomorrow, same time, same place. See you then.